General Trust here. Let's talk about how you can get rich and survive in this recession, non-recession. You know, some people are saying it is, some people are saying not. So you can invest in precious metals and cryptocurrencies, right? Robert Kiyosaki advocates for gold, silver, and Bitcoin as hedges against economic instability. Gold is near all-time highs at 3,000, bucks an ounce, up 43% roughly year over year, while silver has risen to 45% year over year to about 33 bucks an ounce. Bitcoin's 786% 5-year growth highlights its potential despite volatility. There's defensive stocks and sector funds that you can also, get into, like healthcare and consumer staples. So these sectors outperform during downturns due to stable demand, right? There's large cap stocks. So companies with strong balance sheets and low debt are more resilient. There's index/ETF funds. Broad diversification reduces risk compared to individual, stocks. Fixed income and dividend investments. So bonds and dividend paying stocks provide steady cash flow. Reinvesting dividends mitigates volatility as seen in dividend ETFs. Entrepreneurship, this is kind of like a hit or miss one, right? Starting a recession resistant, business like essential services aligns with Kiyosaki's advice to prosper during the impending depression. Real estate and asset acquisition. So wealthy investors often buy undervalued assets like stocks, real estate, or entire companies during downturns, positioning for long-term growth. There's the prudent risk management. Okay, so avoid panic selling and maintain liquidity to seize opportunities. Prioritize reducing high interest debt to improve financial flexibility, right? Now, here's how to financially protect yourself during a recession, right? It's simple, but not so simple. Take it seriously. Build a robust emergency fund. Aim to save 3 to 12 months of living expenses in a liquid FDIC insured account to cover necessities during job loss or income reduction. For dual income households, target 3 to 4 months. Single income earners should aim 4 to 6 months. Reduce high interest debt, right? Pay off credit card balances aggressively to avoid compounding interest, right? Negotiate with creditors for hardship concessions if needed. Live within your means. So trim discretionary spending like subscriptions, travel, etc., and adopt a strict budget focused on essentials. So practice living on one income if part of a dual earner household to build resilience. Diversify income streams, right? Develop side hustles like consulting, freelancing, etc., to supplement primary income and mitigate job loss risks. Optimize investments, right? Diversify holdings across uncorrelated assets, being stocks, bonds, to reduce volatility. Avoid panic selling. I can't say that enough. During market downturns, maintain a long-term perspective. Hold cash reserves like the CDs, etc., for near-term expenses to prevent liquidating investments at a loss. You're also going to want to strengthen credit health, maintain a credit score above 740 by paying bills on time, keeping credit utilization low, and preserving older accounts. Strategic spending adjustments, so delay major purchases and prioritize recession resistant assets like treasury bills. If unemployed, contact lenders, about payment flexibility. Those are some of the things that you can do. Now, here are the best, sectors to invest, during a recession. Again, we talked about it a little bit. You got healthcare. Healthcare remains critical regardless of economic conditions, encompassing pharmaceuticals, medical devices, and hospitals. Next, we have consumer staples. So this sector includes everyday necessities like food, beverages, and household products. Firms such as Procter & Gamble, Clorox, and Kroger maintain steady demand, with Clorox returning 13.6% during Q1. Consumers prioritize essentials over discretionary spending, making staples a defensive anchor. Next, we have utilities. So electricity, water, gas are high recession resistant due to consistent usage patterns. Regulatory frameworks and reliable dividends further stabilize those investments. Lower borrowing costs during recessions also benefit infrastructure upgrades. So that's what I have you today. Please take a moment right now, hit that subscribe button and the like button. If you gain value from this video and you want more videos like this, hit that subscribe button and the like button.